You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. Storm is coming, so you better start running. No, you can't control feeling my bones. I'm coming for you, coming for you. I'm coming for the throne. I'm coming for the throne. So you wanna be my enemy? You should've known I never kissed the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane? It's your mistake. Kingdoms rise and fall. I come to take it all. I'll take it. I've come to take it. Kingdoms rise and fall. I've come to take it all. I'll take it all. Storm is coming, so you better start running. No, you can't control feeling my bones. I'm coming for you, coming for you. I'm coming for the throne. I'm coming for the throne.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same. Cause that's what it takes. never look back, 'cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change, slowly take a step today. I will never be the same, 'cause that's what it takes.
There we go. There we go. Hello, hello. December 7th. Anya, how are you doing? Merry Christmas. Well, not quite, but it's almost Christmas, you guys. I thought, man, what a busy damn weekend this has been. I certainly didn't want to be going live at 9:30 at night, but it's been busy. I got to have a great lunch today with some viewers from the channel who drove in from California. Shout out to Terry and Karen. Thank you guys. Always good to catch up with you when you're in Texas. Tonight, ladies and gentlemen, we're having one drink. It's a one drink limit. And I already got my Guinness poured. So feel free, if you're of adult age, to imbibe. It is the holiday season after all. Scott, good evening. Anya, good evening. I want to talk a little bit about Warner Brothers and Netflix. Maybe we'll talk a little bit about box office. We can talk about Michael Burry if you want. I was going to do a video on Netflix and Warner Brothers, but the headlines just keep dropping. And, what's the point in sharing some thoughts if this thing's doing a 180 every 12 hours since Friday? We got what else? We got the news on Friday that AMC is selling most of their Hycroft holdings. That's also something interesting we could talk about. We got GameStop earnings coming up. We got an AMC shareholder vote coming up. We got rumors of more GameStop store closures coming in the beginning of the new year. How many is that going to be? Have you guys thought about that? Are you even aware of that? What's their revenue going to look like next year? Margins and earnings. I think it's going to be good. I still have a long GameStop position. I'm rolling the dice right along with you guys. And but I don't know. I haven't made a formal GameStop. I don't remember if I made one in Discord or not. Someone was just asking me in the comments, did you publish a GameStop earnings guess yet? And, I've done a lot of analysis of other people's guesses over the years. But when the company's in this much state of change, it's hard for anybody, even the most devout follower of GameStop, to make an accurate guess. And I'm not trying to be the most devout follower of everything about the company. I spend a considerable amount of time analyzing the stock and the financials, but I don't spend a lot of time trying to guess what their revenue are going to be exactly. Is it going to be better or worse than expectations? Is it going to be better or worse than last quarter or year over year? That's kind of the level of detail I go right now until Ryan Cohen settles things down a little bit. finishes the store closures, gets the power packs rolled out. And, when I think when things have settled down, it'll be much easier for us normies to give you guys more reasonable guesses. I just hate guessing a number if I have no idea. Am I going to be even close? Am I going to be right? Am I going to be wrong? It's much easier to do with some other companies, especially, for example, a company like AMC. I think, we in the entertainment industry, I don't own any AMC. I own several other movie tickers. But, when we have the box office and we understand the cost structure of these companies, it's very easy to plug and come up with a pretty reasonable estimate of what their revenue and earnings are going to be. I love that about the movie industry. It really helps us on timing our trades. You just got to take your head out of the sand and be able to look forward. And that man, I put out a tweet on X this morning talking about cash flow again, because guys, there are a lot of people that do not want to talk about Q1. And I don't mention Q1 to be negative. I mention Q1 because literally no one else is talking about it. And you are going to get, in my opinion, you're going to get steamrolled if you're ignoring Q1. Q4, going to be great. Q2, going to be great. Q1, you better be paying attention. You better be paying attention. You better be paying attention. And even when people, I tell people, yeah, Q4 is going to be good. Okay, then why aren't you talking about Q2? You just, you skip right over Q1, bro. We can't ignore Q1. That is the quarter that's going to set the foundation for what happens for corporate actions for 2026. What do you guys think? I mean, am I crazy? Am I being too negative? I think, being realistic is not the same as being negative. Looking at numbers is not being negative. Acknowledging history and facts is not being negative. It's being a responsible investor, not a, I don't know the nice way to say it. There's a lot of people that only want to focus on the most positive stuff. And I get it. I like to be positive too. And I'm very positive about Q4 being positive cash flow. And I'm pretty likely it'll be positive cash flow. And I'm pretty excited about the rest of 2026 after Q2. But Q4, we're only at 1.4 billion right now. We got 3 weeks left. That's kind of, oh man, it makes me nervous. And Q1, I've got my forecast for every quarter next year. I've looked at the past 5 years of what happens between Q4 and Q1. Find me one that's not a cash burn. There's gonna be a cash burn in Q1. And the company is they're low on cash, the lowest they've been since COVID. They're gonna book cash in Q4. They're going to. Cool. I'll pop a champagne with you. But then right immediately after that, they're going to have to start paying the bills in Q1. So I'm just saying, it's not bearish to talk about facts so that you can improve your timing. And if you don't care about timing, yes, I'm a swing trader. If you don't care about timing, then just ignore anything I say. You want to buy and chance that the price goes down because of debt for equity swaps, more dilution, giving shares out to exchangeable note holders, the company doing an ATM. If you don't care about any of that, you just want to keep buying every day, then do your thing. I care. I care a little bit about protecting my capital and having an optimal entry. I don't always get it perfect. Sure don't, but I do my best. And we have avoided the last 3 dilution events by me very carefully paying attention to cash flow. And I don't just mean Q4. I'm forecasting out. And every time we're right, I promise you guys that I'm going to talk about it even more next time. Because people keep getting burned. It's not that I'm trying to be negative. I get sick of people getting burned, only thinking head in the clouds. Like, you should have a little bit of rational, non-emotional thought. If nothing else, I'm not telling you to sell your shares. You do whatever you want. But, we've had some really good trades on AMC sitting out. Wait for a dilution event. Wait for the cash raise that you can predict is coming. And then when the price is low, you come in and buy. I made 1,000% on AMC in 2024. Between buying at the low in March, April, May, and selling into the Roaring Kitty run-up, plus some fortuitous call options that I bought when I saw Roaring Kitty came back. You can make money even in squirrely plays, but you got to be smart on your timing. Chadster, how you doing? How you doing? And I will say, people are wondering, why did AMC sell their Hycroft shares? I think it dovetails very nicely with my belief that the company is going to have a little bit of a cash crunch in Q1, and they're doing the smart thing. They're laying up cash right now. Pad the balance sheet while you can. And I get it. You say, why wouldn't they wait a few more weeks even? Bird in the hand. You heard that saying? Bird in the hand. They know they can get the cash, $24 million right now. They know they can get out at break even. Yeah, I mean, they've got more warrants and they can sell for more down the road if the price keeps going up. But would we have preferred that they hold, until Hycroft's trading at, I don't know, what's it going to go to? How do you predict? How do you predict with any accuracy? Is 12 good? 20? 50? Some of y'all say 100. Someone said 500. I don't know. I don't have any predictions anywhere near that high. But I think they probably could have there's a good chance they could have got a better price, but the CFO's making very tough calculus, like, we got to get cash. We got a buyer, Eric Sprott, ready to buy these shares. We can get this cash on the books. We know we're going to have a burn in Q1. This is important. We have limited ATM ability in Q1. We got to do what we got to do. You got to slaughter the sacred cow. I think that them selling Hycroft just underscores what I'm trying to tell you guys about Q1. There's nothing devious. There was no evil plan. It was the CFO managing liquidity ahead of an expected cash burn. That is my opinion. Now, maybe in May we'll all find out I was completely wrong. But I don't think I will be. Salute. What are my thoughts on Netflix? Trady McGrady, the venerable Mr. McGrady. I am not a fan of this damn Netflix buying Warner Brothers. Let's just get that straight right now. This makes me angry. It makes me scared. It makes me upset. No, Netflix, get the F away from Warner Brothers. I don't buy this whole story that they're pushing that, they're gonna respect the movies that Warner Brothers Discovery is working on. Maybe for 2026 they will. After that, do you think the CEO of Netflix, what's his name, Sarandos or whatever, do you think he really wants to see movie theaters succeed? No, he is doing this as a power move to cement Netflix as the destination to watch entertainment. Netflix on your TV. And if you take out Warner Brothers, you remove 20% of the movies after 2027 and send them straight to Netflix, or send them to Netflix after a week or two, or do a simultaneous launch. Theater companies are screwed. I don't know if this is going to go through or not. We got one day I see a report that Trump is supporting it. Then I say it could be. Here's another one. He says it could be a problem 3 hours ago. This story keeps flip-flopping. And is it because there's a lot of power moves going on in the back? Somebody greasing Trump's palm? He's trying to see who gives him the biggest payout? I don't know. But I do know that if this goes through, I am very worried about the world we live in terms of the entertainment industry. What do you guys think? Is there any good about this? I mean, the best you could say is, I don't like movies anyways. You know, some of y'all, I don't like movies anyway. I just want to watch it from my home. So this is great. All right. Well, that's fine. But some of us like going to the big screen. And this will change things as we know it. Is it going to be the end of the movie theaters? No, but it will be the end of movie theaters as we know them today. Only the lean and mean are going to survive in any sort of fashion that that you're used to right now. We can't do this on a 20% lower box office. We can't. I don't just mean AMC. I mean the industry cannot take it. It's going to be devastating. So it's not a done deal yet, right? They got to get regulatory approval. And I think the EU, probably there's some regulatory stuff over there for sure in the United States. Hollywood, I don't really see that Hollywood is super in favor of this. Actors, you should be worried about it. Movie distributors, film writers, everybody, you should be worried about Netflix. Why David Zaslav and the WBD board favored Netflix in turbulent times. The funniest thing about this, I think Netflix, didn't they guaranteed Warner Brothers, if this deal does not go through for regulatory or whatever reasons, we will guarantee you a payment of $5 billion. Wouldn't it just be hilarious if this was a setup to steal $5 billion from Netflix? I mean, that would make me laugh. And I haven't even looked at the numbers to see if Warner Brothers could survive until such time. They have a lot of debt, don't they? But a $5 billion investment, and then what? They could go buy themselves a theater chain. Just saying. Financials on Warner Brothers. How much debt do these bastards have? Oh my word. 36 billion in debt. Total liabilities 69 billion, total assets 104 billion. 52 in tangibles, 25 in goodwill. Well, you can kind of see why this company's in trouble. How much cash? 5 billion. I mean, the balance sheet looks okay, but I mean, when the bulk of your assets are goodwill and intangibles, yeah, they probably do need to sell to somebody. Net income, the trend is not our friend. Oh wait, sorry, that's cash flow. Hang on, it's not that bad. Let me go to the income statement. Net income. Let's go down here. Oh, well, it's still bad. The trend is not our friend, ladies and gentlemen. These guys are having a rough time. Hey, Hollywood, wake up and make some good movies. Stop with this woke shit. User 1, G4G, says, what do you think will happen to Netflix balance sheet after this deal? They will have to assume a significant amount of the debt, yeah, and use all of their cash on hand. Not all of their cash on hand, right? It's a cash and stock offering. And let's just check. Netflix has so much cash it'll make you puke. NFLX. They have cash and short-term investments, $9.5 billion. Income every year, $39 billion in revenue. Net income, $8.7 billion. Free cash flow per fiscal year, $7 billion. All right, let me refresh my memory here on how this deal is going to go down. Total enterprise value of $82 billion. That would be the market cap plus the debt, right? Equity value of $72 billion. Transaction is expected to close after the separation of WBD's Global Networks division, Discovery Global, which will be completed in Q3 2026. So we got 3 quarters, at least 2 ahead. I was looking at stock prices, and by the way, I did buy some Cinemark on this sick dip. Thank you very much, Netflix. Look at that. I mean, Cinemark down from $30 to $22. I bought at the low on Friday. I had sold my Cinemark a year ago, and I've been kind of waiting for a pullback. This is just the kind of pullback I want. I don't know if I'll own it past Q2. We got to see what happens with Netflix. Netflix is down. I wanted to put AMC over here. AMC didn't actually get spanked too bad on Friday, only down 2.5%. Cinemark went down 8% on Friday. Holy smokes. Netflix down about 3% on Friday, and WBD up 6% on Friday. Where are the deal details? All right, transaction details. Here's what we wanted. $23 billion in cash. Each Warner Brothers shareholder will receive $23 in cash and $4.50 in shares of Netflix. Yeah, so where are they getting all of the cash for this? $23, and what is the float on WBD? $2.3 billion. Holy shit. Where? All right, someone help me out, because we just looked at the balance sheet. Where is Netflix getting that much cash? I see $7.8 billion. What am I missing here? User says if Netflix market cap drops to $200 billion, then they would have 30-40% debt to market cap, and they would become a heavily indebted company. Yeah, I mean, that's a considerable amount of debt that they would be taking on, bringing Warner Brothers on board. Let's just see how much debt they have right now, $13 billion. That's going to be like 4x, bringing all that Warner Brothers debt over. Good. Well, maybe they'll just torpedo themselves. Michael Anthony, what's going on? He says, look at DLO. Is that another ticker, Michael? Trump's news saying on Bloomberg TV that he may stop Netflix from buying. Yeah, I saw that headline here. Trump calls Ted Sarandos a fantastic man, but says the Netflix Warner Brothers deal would give the streamer a very big market share. Could be a problem. Ted, come and see me. Could be a problem. They have to use their cash on the balance sheet, sell shares, and dilute. Oh, yeah, that makes sense. Duh. Sorry, it's been a long weekend. Yeah, they would have to dilute, sell shares, raise cash, plus cash on the balance sheet. Well, I'll by the time I do a video on this, which was going to be Friday, then it was going to be Saturday, then it was going to be today, but the damn news keeps changing so fast. By the time that I do a video, well, it'll be one day next week. I will make sure I have all of those details very crisp in my head about how this is going to work. Yeah. Sometimes big news drops like this on a Friday and you get all these flip-flops on exactly what's going to go down. Netflix did send out an email to their subscribers saying nothing's changing. Why did they do that? Like, were they worried people are going to cancel because the price is going to go up, the subscription? Nothing will be changing right now. Yeah, it's going to be changing once they bring on $40 billion worth more of debt, though. You know that's going to happen. How do you monetize that? How do you recoup your investment? You're going to have to, especially if you're ramping down movies, you're going to have to increase the subscription plan rate, or you're going to have to hope that you bring on new customers. Maybe they think they're going to bring on HBO customers into Netflix. I don't know. Can we look at the chart for Netflix? Absolutely. I know a lot of people hate Netflix, especially if you're investing in theater stocks, and I get it, but I mean, the chart's been pretty much damn on fire. PE ratio, 41, trailing 12 months, 39 forward. $16 in 2022 up to $134. Oh my gosh, it's enough to make you sick unless you owned it. Buy and hold. Wall Street darling. I mean, sometimes it's good to have your eggs in multiple baskets, I guess. I did not own Netflix during this run up, but man, whenever I see a chart like this, you sure wish you had a little bit of it. They did what? They dropped under the 50 moving average on the weekly here. We got the 200 on the weekly down around $60. On the daily, it crossed underneath both. It's not what I would call in a super bullish technical setup. And I guess people are going to have to digest what they think this is going to do to Netflix power, dominance, debt service, debt ratios, as you guys were asking about, dilution. But then you bring on the enterprise value of Warner Brothers and all the library of movies. I don't know. I haven't looked at it enough to have really crisp thoughts about whether this would improve the value of Netflix or make it more problematic. They do have positive cash flow. They're a cash printing machine. That's one thing. I mean, Netflix free cash flow. Trailing 12 months. Let's go to the quarterly. Trailing 12 months. $8.9 billion. Their free cash flow, guys, it's as much as the entire domestic box office revenue. All of the movie admissions is Netflix free cash flow. That is crazy. These guys are killing it. Ridiculous. Makes me want to throw up. But God, if you invested in Netflix, I mean, you're doing all right. Hate the game, not the player, or hate the player, not the game? Which one is it? User says, do you think Netflix could have a dead cat bounce? I think that the market in a complex deal like this needs to really digest what it means. And the algorithms and the smart money probably already digested it on Friday, or at least they will by Monday. So, and it's on a downward trend. And then you have to factor in the uncertainty of, will the deal get done? It's kind of like when Elon was trying to buy the X platform, and you saw the value of Twitter bouncing around based on the anticipated buyout, but then it was derated a little bit by uncertainty. I don't know. I mean, you have a valid point in the comments if you're saying this is really going to screw Netflix up in terms of debt. I don't have a strong counter argument for that. Mostly because I haven't thought about it enough to be able to argue both sides yet. I just know that I'm mad and I don't want to see this happen. But we have to weigh what it's going to do to the capital structure and the balance sheet of Netflix versus what this move, if they pull it off, is able to do in terms of revenue and net income. If I agree with you, Michael, if it gets a severe drop down, to this 200 moving average, especially, that might be, for those of you who've been looking at this, salivating, saying, I wish I would have played that instead of XYZ, if it does retrace all the way to the 200, that might be a good place to take a little stab at it. On a lot of charts, if you're in my Discord, we will wait a year or two sometimes for those retracements. And those are where I like to buy. Don't always get it, but there's thousands of stocks to choose from. So we just look for we look at tickers like this. We identify where would we like to own it if something bad happens. And then if it retraces and we think that whatever bad happened will eventually get resolved, then we take a little entry. The True Myth says, what should one study in order to understand trading better? Look, there's many ways to trade, right? There's day trading, there's momentum trading, there is value investing. Or there's just buy ETFs, buy an ETF that matches the index. You got to decide what's your risk tolerance, what's your timeline, what's your available income, and how much time do you have to babysit looking at stocks and researching. If you don't have time to babysit the tickers, the news, if you don't have time to properly research, just buy index matching ETF. And, you want to throw a little bit of play money at something, that's fine, but keep your money in something safe. If you have more time, like I do, to properly research stuff, then, there's quite a few good books on value investing. I've published my book list on Amazon before. It's in the education room on the Discord. And value investing, it's pretty simple. You might remember Keith Gilroy and Kitty identified GameStop as a potential value play back in 2020. He kind of took the classical view where the market cap was lower than the cash on hand. The net cash. I know people are trying to extend that argument to today's GameStop, but they conveniently ignore the $4 billion in debt that GameStop has. So it's not the same value play as Roaring Kitty was looking at in 2020. That is one way you could look at it. We're digging in the bottom of the barrel and we're looking at companies that have a market cap under the book value. So instead of spending all of my time digging around at the bottom of the barrel, typically what I'm doing, who asked that question? The True Myth. What I'm typically doing, I consider a slightly easier path, is look for blue chip companies that are under pressure in the news, under pressure on social media, under pressure because of some stupid political move that they made. Harley Davidson. I'm just going to throw out some companies that fucked up in the past few years, right? Harley Davidson, Target, Disney. Companies that you don't have to agree with their politics, but they're not going anywhere, right? They're not going to go bankrupt. But if their stock drops 50% because of some management, they put the wrong ad campaign out there, I'm going to eat that up. I wait for those moments. Doesn't mean I love the company. It doesn't mean I love their agenda politically. It means there's a damn value on the chart. A company with a long history of growing revenues and growing profits got smacked. X. Remember when Elon or Tesla, when Elon was helping Trump out and Tesla got smashed? Things like that. Look for things like that. That's an easy thing to do. But you do need to look at the chart, identify where it could retrace to. Sometimes, I might be chasing one of those stocks on a bad social media cycle, and I take an entry that's a little bit too early, and it keeps going down. People are mad longer than I think they will be. But if I really believe in the company management will eventually turn around their mistake, I'm not talking a mistake like, oh, you've got a lot of debt. I'm talking like a mistake like management did something stupid on social media or their perception in the country. If I really believe that they can turn it around, then if it keeps going down, I just buy more. Because I do not think that company's going bankrupt. That's your choice. You got to analyze those plays. Zachary says, I think the judges and the president are insane if they allow Netflix to buy Warner Brothers. I agree with you, Zachary. Do not let this happen, Mr. Prez. Sparky, what's up? He says, how many times book does it trade? What are we talking about, Sparky? Netflix? Are you making a funny? How many times book does it trade? Oh boy. I think he's pulling my leg here. I'm going to look first always at things like return on equity, 42%, return on assets, 14%, return on invested capital, 18%, ROCE, 28%. We go to the income statement. We look at profit margins. Look at this. Gross margin, 46%. Operating margin, 26%. Profit margin, 22%. Free cash flow margin, 17%. Guys, forget about all these dum-dums talking to you about book value and start looking at things that Wall Street cares about, like everything we just looked at. Margin, 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 margin. ROE, ROA, ROIC. These are what matter. Nobody gives a damn if you're trading at 2x book value. If that is how you start your analysis, I'm going to call you an idiot. I'm sorry. You are... That's kind of mean, an idiot. You should go take a finance class. Let's put it that way. Like literally a freshman in college could do a better job of analyzing the value of a company. Nobody starts out saying, well, this thing's trading at only 2x book, therefore it's undervalued. Just dumb stuff. Dumb stuff you hear on YouTube. Liquidity's good. Solvency's good. A great balance sheet gives you a lot of comfort. It lets you sleep at night. It's not a valuation. It's not how you value a company. Sparky says, I'm being funny, Catholic. Yeah, I knew you were being funny because I know you're smart enough not to care about what something is trading relative to book value. Oh, man, it just drives me nuts, Sparky. These guys saying GameStop is it's undervalued because it's trading 2x book. Nobody cares. If you drank the Kool-Aid and you believe that matters, then, God help you. I trust in Ryan Cohen. Maybe he will save you. But the people giving you that advice certainly are not doing you any favors. Ryan Cohen hopefully will. $5.78 a share, Sparky. $5.78 a share, and it's trading at 100. So people would say, oh, well, clearly, look, how's it trade that much higher than book? This is why earnings and revenue growth matter. This is why all of the returns and the margins matter. That's all Wall Street cares about. Growth potential. I did not trade SMX jersey recycler. And who is that? Lacrosse says, thoughts on Japan? Are we talking about carry trade? I haven't looked at it in a month. And the last time I looked at it, everybody was social media. Japan carry trade, unwind, I think, just like reverse repo, there's a lot of people trying to talk about stuff they don't truly understand. That's about all I'm going to say about that. I was laughing my ass off when the Fed flipped from reverse repo to repo facility, and people were still talking about reverse repo. Like, you don't even understand what the Fed's doing. You don't understand that they've had a policy decision announced for years. And you don't understand that they flipped to injecting liquidity instead of removing it. And you're still going on and on about reverse repo. Like, just stop. You're not an economist. Quit trying to play one on YouTube or Twitter. My degree is in economics, and I barely understand this stuff. It cracks me up, the people that have zero real life experience in this stuff trying to counsel you guys on how to invest when they've spent zero time truly understanding what's going on. They just repeating what they heard on social media. What else? Let's see what other headlines we have about old Netflix. Trump, Netflix, Seth Rogen, and Evan Goldberg. AMC should buy it. Are you serious? What is this? Where is AMC going to get money to buy Warner Brothers? Let's see what this says. Can I read it? When pressed by Variety as to their personal reactions to the deal, Rogen said, absolutely not. Goldberg said, I don't know. Who knows if it even happens? I think AMC should buy it. How? Where's AMC going to come up with $80 billion? That's pretty funny. If only they held on to that Hycroft. Could have been. That's my personal opinion, he says. Mr. Goldberg, AMC should buy it all. I don't know how, but they should. No one will see that coming. Oh, man. But hey, someone, should someone come by Warner Brothers and AMC together and then go up against Netflix and preserve the movie industry as we know it? I'd be down with that. Make it a package deal. Warner Brothers, Discovery, AMC. And we're going to put out good movies and we're going to make sure we give them a good window. Someone, Elon, who's got that kind of money? Elon, who else? Who else can we hit up? Eric Trump, maybe? India Multiplex Association opposes the Netflix deal, a meaningful reduction in high quality content. Man, India is worried about their cinema ecosystem. Yeah, people better get vocal, I tell you that. India, UK, United States, each one of you guys, get vocal. We cannot allow this to happen. It might happen anyways, but we should not go down without a fight. Why David Zaslav and the board favored Netflix. All right, let's see what they say here. After a marathon days of telephone and video calls, emails, and text messages, the deal was clinched Thursday night. But there's no chance for high fives or a group huddle. In modern fashion, the negotiations were conducted at arm's length via phone and electronic communications. Among the hurdles was Warner Brothers' insistence that Netflix commit to a record-setting $5.8 billion breakup fee should the deal... Oh, man, I really want to see Warner Brothers just be handed $6 billion from Netflix. I will fucking... We'll have cake and champagne. Please, please, take their money. Opposition to the deal assembled swiftly and fiercely from unions, consumer watchdogs, and politicos on both sides of the aisle. Writers Guild of America says this merger must be blocked. The board leaned toward Netflix because the company has such a strong balance sheet. Its stock has been consistent and durable over the last decade. Well, I mean, I can't blame them for that. The board has a fiduciary responsibility to bring on board the best buyer and not torpedo everybody after the deal is done. Maybe you get a Paramount trying to buy Warner Brothers and it puts them really on precarious ground. I don't know. But I don't care. I don't care, Warner Brothers, if Netflix looks like they have a better balance sheet. This is bad for everybody. We're talking entire industry here going to be decimated. Netflix was the better fit and safer option for shareholders. I bet these executives just want their golden parachute. They just want the easy way out. They don't care about us. Screw them. Donald Trump is famous for working his phone, and Netflix CEO Ted Sarandos is definitely in his contacts. Netflix and Warner Brothers preparing to make a case for the benefits of the deal. Could be a long drawn out battle in Washington with the FTC and the Justice Department. FCC is not expected to play much of a role. Sources say the teams are confident that on the antitrust merits, it's hard to prove the enlarged company would have anything close to the monopoly power. Oh, come on. We can all see it coming from a mile away. Yes, they will. They will. Even if they don't have monopoly, they will have a dominating power with the presumed intent to move content quickly to streaming or bypass theaters altogether, and it's going to be devastating. Yeah, and Zachary, what did Sarandos say? Was he the one talking about, oh, my son, just watched Dune on his phone? Whatever damn movie he was talking about. What's the problem? Nobody wants to watch it. Oh, I mean, maybe kids, some of them. There are plenty of us that still enjoy watching stuff on the big screen. Nothing can replace it. I wish I had one of those huge ass screens that you guys in California and New York got. The big old IMAX. We got the janky IMAXs. I want a good IMAX in every major city in this country. Put me in charge and I'll make sure that happens. Zachary says, have you seen the original movies Netflix produces? I'll tell you this about that, Zachary. My wife got a free Netflix subscription through her whatever phone service she has. And for some reason, Zachary, we've been married and together, 10 years now. Not married 10 years, but together 10 years. Still haven't convinced her to get on my plan for the phone. She's on her own plan, and she got free Netflix, and she watches a lot of Netflix, but it is the most idiotic, mind-numbing stuff. It's all foreign TV shows with dubbed English voices. That's what they're pushing out on people. It's not the Netflix I remember when Netflix started. It used to actually be pretty good. There's literally almost no redeeming content other than maybe Stranger Things. The vast majority of their content is absolute trash. They're looking for what can we buy cheap, throw some English dubbing on it, and push it out to the people. The True Myth says Utopia has made a killing. I also noticed, guys, that Fast Times at Freddy's, the Freddy's movie, the one that I really don't care to see, Five Nights at Freddy's. I went to see the first one. This one is not high on my list, but they absolutely killed it this weekend. $63 million. And it had a horrible rating from the professionals. As you would expect, this is not an Oscar-worthy movie. $63 million. I had, for the entire domestic run on Five Nights at Freddy's, I had it at $70 million. I had opening weekend at $40 million. We're at $63 million. We almost hit my estimate. I try and estimate realistically, not hopium, they absolutely killed it this weekend. I love to see that. But Wicked for Good dropping off, unfortunately. Zootopia is still doing fantastic. Great movie. Hope you guys went to see it. I thought about going to go see the Kill Bill Whole Bloody Affair, but I barely liked, what did I miss in the whole zeitgeist here? Kill Bill never really spoke to me. I've seen the movies on TV, never really spoke to me, and I can't imagine going to sit 4 hours to watch Uma Thurman do a bunch of karate chop. Don't go ninja. Nobody don't need to be ninja. Now You See Me, Now You Don't. I did go see that. That was pretty good. Pretty good. Eternity's on the short list for this week. Hamnet is on the short list for this week. 2 movies that I want to see. They're not doing so good, but we're running out of stuff to see. I'll probably go see those before Five Nights at Freddy's. I'll tell you that. I agree, Zachary. I grew up in the blockbuster era, Zachary, where we'd go get 2-3 movies every Friday night at the local store and come home and watch movies on the weekends. Back in the 80s, you didn't have that much shit to do. But I still enjoyed going to see the big movies on the big screen when they came out. And nothing at home replicates going to a real movie theater. I get it. If you're on a budget, you got to do what you got to do. I don't know how the average per patron food spend is like $7.25. I don't know how y'all do that. A lot of y'all must be sneaking food in. We spend like 40, 50, 60 bucks every time we go to a movie. And we go to a lot of movies just on concessions, popcorn, Coke, pizza, hamburgers, chicken nuggets. She always wants a candy, sometimes a shake. I try not to eat all the junk food. She's younger, she can get away with it. But I will have me an occasional popcorn or an occasional pizza. And if I have a pizza at AMC, you can rest assured that I'm planning my meals and my calories for the day. You got to plan that shit out, guys. We need you healthy. We need you here for the next 10, 20, 30, 40 years, however much time you got. I used to buy the heck out of the beef jerky that they had there, Zachary. That was my go-to, the beef jerky. I'd buy 2 bags. That Archer or whatever it was called, but they stopped selling it. I don't know why. Why did you stop the beef jerky, Adam Aaron? It drives me nuts. So I'll get a meat or a everything pizza occasionally. The wife likes to split it, which is fine. I don't need a whole pizza. I can't even eat one at AMC. The dine-in theater pizza, the fresh baked one, they're really, really good, but I can't eat the whole thing. I'll be sick. The True Myth says, even if AMC started to get out of debt and do well, AA will do whatever he can to make cash from the stock, even if it crashes the price. Well, I mean, look, Mr. Myth, AMC's got an upside down balance sheet. There's just no way around that, right? I know nobody will talk to you about this except me. And I'm not saying this to be bearish. It's just someone has to. I'm a retail investor just like you. I've been in AMC or swing trading it since 2021. just like you, although I have not held it for the last year for reasons that we've covered for the last year. And look, the price is down 50%. So my decision has been the correct one. And I'm watching for a new entry. But why is Adam Aaron continually raising money? Look at this balance sheet. Total assets, $8 billion. Total liabilities, $9.7 billion. Total current assets, $619 million. Total current liabilities, $1.6 billion. That means, just roughly speaking, in the next 12 months, they have $1 billion worth of bills due that they don't have cash for. This is what we call the working capital. So you go down and you see negative $1 billion working capital. Adam Aaron and Sean Goodman have no choice. You either got to have more box office or you got to sell shares, do debt for equity swaps. The company cannot survive like this. They've done a yeoman's job. They've done miracles thanks to all of us supplying the capital. But the fact that they've been able to survive despite this balance sheet and despite the box office not being big enough to throw off positive free cash flow, it's literally everything they can do. And all I say to you is it's up to you to make sure you understand what's going on here. Look at this free cash flow on an annual basis. That is your operating cash flow plus what they spend on CapEx. It hasn't been positive since 2019. You need a bigger box office, or they have no choice. They have no choice to raise money. They have no choice to sell shares. And as long as Wall Street sees this, what are they going to do? They're going to short it. They're not wrong until the box office changes. I get it. It sucks. I get it. They want the company to go bankrupt. Of course, until box office changes, no one, who's going to go against them? Us? Do we have the power? Do we have their billions of dollars? We don't. Only when Roaring Kitty comes back. Please come back, Keith. Come on, my friend. How does it end for AMC? True myth. Well, I'm going to pretend that the Netflix thing is not going to go through. Because if that goes through, we're in a whole different conversation. What is going to happen if we just ignore Netflix? 2026 box office will be better, I think, than 2025. Better than 2024, better than 2023. Q1 will suck. It's going to suck balls. Q2 and Q4 should be really, really good. We hope better than, the totality of the year, better than the previous several years. But there is zero chance that they can avoid issuing more shares. Because even if there was no cash burn, let's just say there's no cash burn, they still have to fix the balance sheet. So you should just keep that in mind. We're in a company that has to fix the balance sheet. They tell you that in every earnings call, every 10Q. This is no secret. It's fine if you want to speculate on a short squeeze. It's fine if you want to speculate on Roaring Kitty. But just understand, as your foundation, that you're going to have a little bit of turbulence because of the balance sheet. I want to speculate right along with you on Roaring Kitty coming back or a short squeeze, but I'm not going to jump in front of the machine gun until I see the momentum moving the other way. Or, there are moments when we're forecasting cash flows. And the reason I am such a dick about this, when you can forecast the cash flows, you can greatly improve your timing. Like, why do you think the stock bottoms out every year between March and May? Because they're diluting in December or January. Why are they diluting? Because the cash flow of Q1, like, I'm not being bearish here. I'm trying to teach you guys something. You can improve your timing if you insist on trading the stock. Like, I gotta see how they're going to get through this Q1 now. Vic says, do you foresee a future when AMC will make money by exhibiting movies rather than selling shares? Yeah, they kind of are in the share selling business. I have my spreadsheet, and I can plug in a box office number that will tell me exactly how much box office they need to be profitable, both in non-GAAP and GAAP. And it has improved from 2019. Adam Aaron's not lying. But they keep on getting in this situation where the debt restructuring that they're doing, even though they have paid down debt, look at the interest expense. Keeps going up. Because they keep on they're being put over the barrel by these damn lenders. This is not AMC's fault as much as the lenders have the negotiating power. I want you to look, just even in Q4 of 2023, people keep telling you guys on social media the interest expense is getting better. No, it is effing not. The debt's getting decreased, yes. The debt's getting decreased, yet mysteriously the interest expense, 94 million, 91, 89, 110, 114, 110, 111, 120. It's gone up from 94 million to 120 per quarter. That's $25 million in 2 years, not even 2 years. That's despite the debt going down. They got to fix the balance sheet. They got to fix the balance sheet. They got to fix the balance sheet. They need more box office. It'll improve the debt ratios. Then maybe get a credit rating upgrade. Then they can go renegotiate this debt with a more favorable rate. Yes, people will tell you if the yes vote passes, interest rates on the debt are going to go down. True. On one tranche of the debt. The tranche, which what? Coincidentally is going to be exchangeable notes, the smallest tranche. I think I tweeted about this a week ago. The net impact of the yes vote passing on interest rates will be a couple $1 million. It's not going to be some massive decrease. And I have spent way too many hours doing interest expense calculations and debt calculations. It could change, if they trade a bunch of shares and decrease the debt, that would be helpful. But these people telling you that the interest expense is going to drop tremendously after the yes vote, it's going to improve. It's not going to drop tremendously. It's even worse though. If it's a no vote, the interest expense gets even worse. That's what you want to avoid. You want to avoid 120 going to 130, right? User says, I think it'll go through. I don't think Netflix, so he's talking about the Netflix deal. Netflix would not have offered a $5 billion breakup fee unless they received some sort of reassurance. You're probably right. That's what really, it makes me sad. Like, I agree with you. My gut says they got to be pretty convinced they're going to win to have a almost $6 billion breakup fee guarantee. I don't want to have that conversation with you guys in 1, 3, 6 months. I do not want to have this conversation that the Netflix deal got approved. I do not want to have this conversation. We might have to. I sure hope we don't. Zachary says, I wish I knew why the debt holders can force the worst rates. There's only a certain amount of distressed debt lenders, Zachary. And when you have a credit rating, the market will tell you. When you have a bad credit rating, the market will tell you. Sparky, are you still here? The market will tell you what kind of rate you can get. And AMC's not dumb. They're not going out there and trying to get the worst rate possible. They just got a crappy balance sheet. And the restructuring they did in July, they were even more over the barrel because they were trying to avoid a lawsuit from the lenders. So it was not just a simple debt restructuring as much as a legal settlement. And they got boned by the debt holders. What do you want to do, Adam? Do you want to go to court or do you want to get boned on the interest rate? AMC got boned, but they avoided going to court. It's like this continual live to see another day plan. But we've gotten boned now for $25 million of extra interest per quarter, despite the debt going down. Zachary says, how much improvement they need to get a better rating? We need probably, Sparky could tell you better than me, but I think we need to see let's say 4 consecutive quarters of positive GAAP earnings and positive free cash flow on an annual basis. Positive free cash flow. The credit agencies need to believe AMC is not going to be in continual dilution mode. You got to have some belief or reassurance that the box office is going to provide enough box office for AMC to be profitable. Right now, if the credit rating agencies, Moody's and S&P, are forecasting $9 billion in box office, they know AMC is not going to be profitable. Therefore, they know that the company is going to need to continue diluting. Therefore, it's tougher to get a credit rating upgrade. We got to get positive net earnings. We got to get positive free cash flow, and we got to get sentiment that box office is truly going to a sustainable, profitable level. Then you get a credit rating upgrade, maybe into the low Bs. Sparky says only a couple quarters of action. Am I being too pessimistic saying 4 quarters? Because every Q1 is a loss, Sparky. So what? Q2, Q3, Q4, oh, we're cash flow positive, but we lost $400 million in Q1. Like, no bueno. You can't just have a couple good quarters. You gotta have a forward 12-month or a trailing 12-month positive, I think. Just being brutally real. Every move that they make to reduce the debt buys them time, improves the ratios a little bit, and it's just a continual prayer that the box office grows enough that they can survive long enough until that happens. That's where we're at. So the most thing that you see me do is go to movies. I mean, that is the contribution I can do. I can go to movies. I can buy concessions. I can decide how to spend my entertainment budget. Investments, I'm going to think really, really hard about timing. Yeah, Sparky says less loss in Q1 over entire year, some profit. Yeah. Now, look, guys, as we're wrapping this up, there are people that have different opinions than me on Q4, Q1 box office. There are people that have different opinions on Q1 cash burn. I think it's good to have different opinions as long as you can back them up. I think we've been very, very accurate on forecasting cash flows. And, I realize there's always a chance I could screw it up, or there's always a chance that the box office will surprise me, or there's always a chance that Adam Aaron has some material, non-public information that I don't know about. Sure. But I think we've been analyzing this play brutally, logically for 4 years now. Maybe not the first year. We didn't care about financials in 2021. But I don't think I'm going to be wrong about Q1. And I don't say that to be negative. I say that because no one else is talking about it, and timing will be important. Q1 will determine what corporate actions are taken, if any. Maybe none will be. And things get better in Q2. So it's survive till Q2 mode. Q4 is they're going to stack cash. Let's just say that. Let's be super positive. But whatever they stack in Q4 is going to go right out the door in Q1 when the bills got to be paid. Now, you tell me you got some sneaky movies I don't know about, and Q1's going to make $2.6 billion. We got another story. I'd love to come back and tell you that story, but I ain't there, and I'm not going to lie to you, and I'm not going to ignore it. Right now, everybody's doing the ignore thing. I'm not going to make any videos to talk about that. Or if someone's talking about it, they're bearish. No, they're honest. They're honest. If you're talking about Q1, you are being honest. I'd rather be honest. And I hope some of y'all appreciate that. I know not everybody does. Some of y'all love being lied to. Anya says, it sounds like they're all they're doing is treading water barely. I mean, it is, Anya. They're treading water, and we got one more needle to thread. We gotta thread the needle on Q1. And I'm really curious how it's going to be done. And I do think that selling Highcroft was a piece of the puzzle. And if you've been following my comments or you're in the Discord, you already know what I'm about to say. I am quite confident that Sean Goodman and Adam Aaron already know exactly what they're going to do over the next 6 months. They already have the plan. They've got every scenario mapped out. They know exactly what they're going to do. These guys are not dumb. They're planners. Sean Goodman's job is to plan 2 years in advance. They know exactly what they're going to do. I spend my time worrying about, thinking about, trying to guess, if I was in his shoes, what would I do? I'm not just sitting here like a retail trader, like, oh, it's going to be a $3 billion quarter Q4. We're going to be fine. Q1 is going to be the best Q1 in history. No, these guys are not thinking like that. Sean and Adam, they're using their finance degrees to use common sense. They already have everything planned out. I just want to figure it out before everybody else does, so that I can either get a good timing on a trade or avoid the trade. I'll let you know. If I find a time where I think it's good, I'll certainly let you know. Vic says, I used to hate the honesty until you were right for years while the perma bulls went tits up. Yeah, I'm definitely not bearish. I mean, I spend a fuck ton of money on AMC. I should pull up a summary from my bank account. You know how your bank account can tell you how much you spent at each vendor from your checking account? I bet you'd be shocked at how much I spent at AMC. And I bet you all these people that are the perma bulls, as you call them, don't spend I bet they spend a fraction of what I spend at AMC. I'm certainly doing my part. Whether or not I'm buying the stock is not important. I will buy the stock when I feel like I have a protected position. The risk to reward ratio is weighted in my favor. And every year I keep on promising you guys I'm going to be more and more blunt with you, because I'm just sick of seeing people lose their money listening to people that don't live in a world of reality. With that being said, let's do a little green candle up, red candle down. Anya says, Tony, you alone cannot save any company. You are right, Anya. So I hope you guys go see some movies too, if you have an AMC near you. It's fine, if you don't have an AMC or you like Cinemark better or Regal. No, nobody likes Regal better. I'm just kidding. But just support the industry. Support the industry. Even if you hate AMC and you like Cinemark, you go to movies, you're doing something. So I appreciate all of you. We have a couple live streams coming up. I might live stream the GameStop earnings, and for sure we're going to be live streaming the AMC shareholder meetings. So we will be around. Pond Prowler Adventures, how you doing, amigo? This is one of the folks that I had lunch with this afternoon, all the way from California here in Austin, Texas. He hit me up and let me know that him and his lady friend were in town. And we had a nice Texan lunch. You know what I had? We had brunch. I had a barbacoa eggs Benedict. Can you imagine? If you can't, well, maybe I'll put a picture, but yeah, I have not eaten since this morning. Pond Prowler. I'm still full. It's 10:47. Will AMC go to $4 anytime soon? If Roaring Kitty comes back or some unknown catalyst happens, yeah. But I'm not based on any fundamentals or financials that I'm looking at. No. Pray for Roaring Kitty, guys. All right, ladies and gentlemen. Pond Prowler, you and Karen have a safe drive back to California tomorrow. And ladies and gentlemen, we will see you this week. And let's have some more conversations about Netflix and fucking Netflix and Warner Brothers. Take care.
We've been waiting for so long. Edgy's rain will soon be gone. A green candle up, a red candle down. By the dip, gotta hold our ground. Edgy's games are dead and gone. Fuck the shorts, we're going long. If you down it, sit and stare. If you love it, buy a share. A green candle up, a red candle down. By the dip, gotta hold our ground. We've been waiting for so long. Edgy's rain will soon be gone. A green candle up, a red candle down. By the dip, gotta hold our ground. Edgy's games are dead and gone. Fuck the shorts, we're going long. Yeah.